A lot of successful Americans are thinking about renouncing their US citizenship right now. And honestly, I understand why. The US is one of the only major countries in the world that taxes based on citizenship. So even if you leave the United States, move abroad, build your life somewhere else, and never live in the US again, you still have US tax filing obligations. You still need to report worldwide income, you still need to deal with IRS forms, you still need to think about foreign companies, foreign bank accounts, investment reporting, pensions, trusts, PFIC, CFC rules, and all the other complications that come with being a US person abroad. And for a lot of entrepreneurs, investors, and high-income Americans living internationally, this becomes exhausting. So the idea of renouncing starts to feel attractive. Just give up the passport and the reporting, stop dealing with the US tax system, move on with your life. And for some people that can be the right decision. But for most Americans, renunciation is much more serious than they realize. And in many cases, there's a smarter path that gives you most of the financial benefit without giving up everything that comes with US citizenship. So in this video, I want to talk about when renouncing US citizenship actually makes sense, when it does not, and why many Americans should structure their life properly before they even think about booking a renunciation appointment. Before we get into it, this is not legal or tax advice. Renunciation is a major legal decision and your exact situation matters. But if you want help reviewing your international tax situation, second passport strategy, offshore company structure, or whether renunciation makes sense for you, you can reach out through the link in the description. So let's start with the core problem. Most Americans who think about renouncing focus on the tax savings. And they think if I renounce, I stop being taxed by the US. And in a very basic sense, yes, that is the idea. US citizens and resident aliens are generally taxed on worldwide income, even if they live abroad. And the IRS is very clear that US citizens abroad are subject to the same general tax filing rules as people living in the United States. So if you are a US citizen living in Dubai, Panama, Singapore, Thailand, Portugal, Brazil, or anywhere else, the US tax system still follows you. And that is frustrating. But renunciation is not just a tax decision. It is also an immigration decision, a family decision, a business decision, an investment decision, and a life decision. Because once you renounce, you are no longer a US citizen. And that sounds obvious, but people do not always think through what it means. You lose the automatic right to live in the United States. Not just for now, permanently. If your life changes 5 or 10 years from now and you want to move back, you cannot simply come back because you were born there. You need a visa like anyone else, and that visa can be denied. Maybe your parents get older and need care. Maybe your children want to study in the US. Maybe a business opportunity appears. Maybe you get divorced. Maybe your health situation changes. And maybe you simply change your mind. Because life is long and renunciation is very difficult to reverse. And that is why I think a lot of Americans underestimate the non-tax value of the passport. The US passport is not just a travel document. It is a right to live, work, invest, build, return, and restart in the largest economy in the world. Even if you do not like the US tax system, that still has value. Now, another issue is US assets. And some people think if I renounce, I am done with US tax forever. But that is not always true. If you still own US real estate, US business interests, certain US investments, partnerships, pensions, a retirement plan, or other US source income, you may still have US tax obligations after renouncing. Renunciation does not magically erase US source income. So if your financial life is still heavily connected to the United States, giving up citizenship may not actually simplify things as much as you think. In some cases, it can make things even more complicated. You may go from being a citizen with certain rights and options to being a foreign person with US assets, US tax obligations, and less flexibility. And that is not always an upgrade. Now let's talk about the exit tax. And this is where renunciation can become very expensive. The US has an expatriation tax regime for certain people who give up citizenship or long-term residency. And in simple terms, if you are considered a covered expatriate, the IRS can treat you as if you sold your worldwide assets the day before expatriation. And that can create a tax bill on unrealized gains. For example, if you own appreciated stock, crypto, a business, private equity, real estate, or other investments, the exit tax can become a major issue. The covered expatriate rules are technical, but one major trigger is net worth of 2 million USD or more on the date of expatriation. Another trigger is having an average annual net income tax liability above a threshold that adjusts with inflation. And the IRS lists the 2025 average annual tax liability threshold at $206,000. So if you are wealthy or if you have appreciated assets, renunciation is not simply walking into an embassy and signing a document. You need to model the tax cost. And sometimes that cost is enormous. And this is one of the biggest reasons many Americans should not rush. If you are already wealthy, have a large business, own appreciated crypto, own US real estate, or have a major investment portfolio, renouncing without planning can be a very expensive mistake. Now, the ironic part is this: many Americans want to renounce because they think it is the only way to lower their taxes. But it is not. There are legal ways for US citizens living abroad to reduce their tax burden significantly without giving up citizenship. One of the biggest tools is a foreign earned income exclusion. For qualifying Americans abroad, this can allow you to exclude a certain amount of foreign earned income from US tax. For 2026, the maximum exclusion is $132,900 per person, adjusted annually for inflation. And that does not solve everything, of course. It does not apply to passive income, it does not automatically solve corporate tax issues, and it does not remove filing obligations. But for many entrepreneurs and professionals abroad, it can be a powerful part of the structure. And then you have foreign tax credits. If you live in a country where you pay tax locally, those taxes may offset US tax in many cases. Again, this depends on the income type, country, treaty, and structure. But it is often a major reason why many Americans abroad do not actually pay double tax in the way they fear. And then there's company structuring. And this is where things become more complex, but also more interesting. If you are a US citizen living abroad and you own a foreign company, the structure matters a lot. You need to think about CFC rules, GILTI, Subpart F, payroll, salary dividends, local corporate tax, foreign tax credits, and how the business is actually operated. And this is not something to improvise. But with the right structure, many Americans can reduce their effective tax rate substantially while remaining fully compliant. They may not get to 0%, but they may get to a much lower number than they expected. And this is the key point. For many people, the question is not, can I pay absolutely zero? The better question is, can I get my total tax burden low enough that renouncing no longer makes sense? Because if you can legally structure your life so that your effective tax rate is 10%, 12%, or maybe 15%, or something in that range, while still keeping your US passport, the case for renunciation becomes much weaker, especially when you factor in the exit tax, the loss of US access, the loss of flexibility, and the fact that the global tax environment is changing. And it is changing fast. The world is moving away from the old offshore model. The OECD's global minimum tax framework is built around a 15% minimum effective tax rate for large multinational groups. And more than 135 jurisdictions joined the broader international agreement to update global tax rules. Now, this mainly applies to large multinational groups, of course. Not every small business owner, but it reflects the direction of travel. The direction is not toward more 0% tax structures. The direction is toward more reporting, more transparency, more substance requirements, and more minimum tax concepts. Dubai has corporate tax now. Singapore is not 0%, Malta has changed, and many classic low-tax jurisdictions have become more regulated. The old idea of renouncing US citizenship to live forever in a clean 0% tax world is becoming weaker. For some people it still works, but for many the real future is not 0%. It is a legally defensible low-tax structure in the 10 to 15% range. And if that is where the world is going anyway, giving up your US citizenship may not be worth it. Now I want to be clear. There are situations where renunciation absolutely can make sense. I am not saying nobody should do it. For the right person, it can be the correct move. But in my opinion, there are three situations where it becomes much more reasonable. The first situation is when you already have a strong second passport. And I do not mean just any passport. I mean a passport that can actually replace a US passport in real life. Something like Canada, Australia, the UK, Ireland, Germany, Italy, Spain, or another strong citizenship with broad visa-free access, serious country backing, and real economic credibility. If you only have a small citizenship by investment passport with limited practical depth, renunciation becomes riskier. Because yes, it may help you travel, but it may not give you the same global credibility, banking access, visa access, or long-term security. You do not want to give up one of the strongest passports in the world and replace it with something that creates problems every time you open a bank account or cross a border. So if renunciation is even on the table, a strong second citizenship should usually come first. The second situation is when your life is genuinely no longer connected to the United States. You do not live there, you do not plan to return, you do not have family obligations there. You do not have major US business interests, you do not own much US real estate, you do not depend on US banking. Your spouse, children, work, assets, and long-term future are somewhere else. In that case, the US passport may mainly be a tax and reporting burden. For example, if someone has lived in the UK for decades, pays UK tax, has a UK family, UK pension, UK home, UK business, and only keeps the US citizenship because they were born there, the analysis changes. That person may be more British than American in practical terms. And in those cases, renunciation can make much more sense. The third situation is when you are high net worth and you have actually run the math. Not emotionally, but based on frustration. Not because someone on YouTube said US citizenship is a slavery, but with real numbers. What is your exit tax? What assets are effective? What happens to your retirement accounts? What happens to your businesses? What happens to future inheritance planning? What country will tax you after renunciation? How much will you save over 5, 10, 20 or 30 years? And for some ultra high net worth Americans, the exit tax is painful but still worth paying because the long-term tax savings are enormous. For example, someone living permanently in a no capital gains jurisdiction with a strong second passport, no US family obligations, no real US assets, and a massive future liquidity event may be a good candidate. But that is a very specific profile and it needs careful planning. Now, if you do not fit one of these three categories, my general view would be do not rush. Build the structure first, move abroad properly, use a foreign earned income exclusion where it applies, use foreign tax credits where they make sense, set up your company correctly, get your second passport if you do not already have one, reduce your US exposure, simplify your investments, understand your exit tax, and then revisit the renunciation question later. Because renunciation should not be the first step. It should usually be the final step after planning. And a lot of people unfortunately do it backwards. They get frustrated with the IRS, book a renunciation appointment, and only then start asking how the tax consequences work. And that is extremely dangerous. If you are going to renounce, you should plan years ahead where possible. Clean up your assets, move investments, review retirement accounts, consider gifting, consider company structuring, review your second citizenship, review your country of residence, and make sure the decision still makes sense after the numbers are on the table. Because once you renounce, it is not just another tax election. It is a permanent legal act. So here's the honest summary. For many Americans abroad, renunciation is not the smartest first move. It may feel emotionally satisfying. It may feel like freedom, and in some cases, it really is the right answer. But most people can get a large part of the financial benefit by structuring properly while keeping the passport. They may still need to file, they may still need to comply, but they can potentially lower the tax burden, simplify their life, and keep the option to return to the United States. And that option is worth something. So before you renounce, ask yourself, do I have a strong second passport? Do I really have no future need for the United States? Have I modeled the exit tax? Have I cleaned up my US assets? Have I checked whether structuring could solve 80% of the problem? Have I lived abroad long enough to know this is permanent? And if the answer is no, then it may be too early. But if the answer is yes, then renunciation may be worth exploring properly. But either way, do not make the decision based on emotion. Make it based on numbers, structure, lifestyle, family, and long-term strategy. And if you want help reviewing your situation, building an offshore structure, reducing your US tax exposure legally, getting a second passport, or deciding whether renunciation actually makes sense for you, you can reach out through the link in the description. And if you are thinking about renouncing, I would be curious to hear your situation. Is it mainly tax, reporting, investment restrictions, or are you simply done with the US tax system? I hope you enjoyed the video, leave it a thumbs up, subscribe to our channel, see you in the next one, bye.